Welcome back. The market's dancing around unchanged this afternoon. A great opportunity for us to take a moment and look inside the center point of this entire past 6 weeks worth of crisis: credit, lending, housing. Countrywide Financial, truly ground zero in many ways for that crisis. And our next guests have been listening to Maria's interview with the boss at Countrywide, Angelo Mozilo, on a day that he just received $2 billion in fresh capital. Martin Weiss, CEO of Weiss Research, along with John Sauro, president of North Atlantic Mortgage Corporation. John, do you agree with the way the market and the credit environment has been characterized today?
Well, Dylan, you know, I think I like what Angelo Mozilo said today. He's clearly a man who is trying to keep his company moving forward during this time. How the credit markets have reacted to this and how the stock market has reacted to this, I would have liked to see a little bit of a better reaction. But I do like some of the comments that he did make today. I believe that, you know, it should raise a level of confidence. I'd like to see the investors out there reflect that.
Oh, but hang on, he
said,
you know, level of confidence maybe in the stability, financial stability of his company, but he did say the housing market's going to lead us to a recession.
He did say that.
What do you want?
He did say that. You know, I don't know whether to agree with that or not. I hope that's not the case. I don't want to believe that's the case. And I like to believe that the economy and the global economy is a lot stronger than what a lot of people would lead everybody to believe.
But I'm just saying, I mean, you know, you say you would like to see a stronger response. There are a number of currents in that conversation, while positive for the stability of Countrywide, not necessarily positive for his view of the economy right now.
Well, I agree there, Dylan.
All right. Martin, I want to bring up something that Doug Cass, who, again, was an open-faced short. He has a negative view of the world, so that is how he sees things. But he sent this email to me after he watched the interview. He said, Mozilo's conduct has been borderline criminal. The amount of selling around $400 million in the last 2 years that he did, this is referring to mortgage bonds, subprime and all the rest of it, the last 2 years that he did while knowing the imprudence of the policies he was pursuing was disgraceful. His argument, of course, and again, some flowery language there, but his argument, Martin, is that Angelo made this bed, and now he needs to lie in it, and shed no tears at the very least.
No, I totally agree, and I disagree with Angelo when he says that.
You totally agree. Hang on, you totally agree to what, Martin?
No, I totally agree that he placed a big bet, and now he's going to have to pay that bet, and he won't be able to, in my opinion. And I disagree with him when he says that the Merrill Lynch analyst was irresponsible for talking about bankruptcy. The Merrill Lynch analyst is doing his duty to warn investors of real possibilities.
You know, I want to be careful because Angelo's not here to defend himself in this conversation, but to paraphrase, and you saw it as well as I did, the analyst went from a buy rating and 2 weeks later went to bankruptcy.
Yeah, what was irresponsible perhaps was the buy rating, and what's unconscionable is the AAA ratings that are being given by Wall Street, Moody's, S&P, and so forth to all these bonds. Those ratings are bought and paid for by the companies that are being rated. And the issue is here that if we are going into a recession, I think he's right about that, then what does that do to the housing market? What does that do to home prices? What does that do to the consumer's ability to pay mortgages, even without a recession, even with plentiful credit? Even with all these supposedly Goldilocks conditions, we have the worst foreclosure surges, we have the worst situation, as he himself admitted. So the question is, when you get a scarcity of credit, which we're only beginning to see spread throughout the market, when you get a decline in the economy or a bigger pinch on the consumer, then what are you going to see in the housing market?
And
then what are you going to see in the mortgage market?
And then there's a lot of hypothetical and then a lot of concrete in that. I can throw a lot of earnings back at you, for instance, retail earnings, consumer and windows, specifically Target, that suggest that at this point the doomsday credit scenario death spread has not yet hit the street. What the future holds, I don't know, but it has not manifested itself yet. John, to the subject of making their own bed, an irresponsible creation of credit, and now seeking them, whether it's a Fed bailout or a money center bank capital infusion, did these folks, whether it's Angelo Mozilo and others like him, make their own bed and create a problem for all of us?
Well, I think everybody made their own bet in this situation, but let's not forget that if you go back several years during the Clinton administration, it was the Clinton administration that asked for the banks to come up with much more alternative ways of lending to increase the affordability for housing and to give people their piece of the American dream. That's what the banks did. Even Greenspan hinted to that many years ago, that he wanted to see that as well. And that's what the banks did. And did they make some poor choices? Absolutely they did. Angelo said today...
And if the dream was sold fraudulently and it's actually the American nightmare, did they really sell them an American dream, or do they just collect some fees?
Well, I don't know that that's the case. I think what they did is they tried to do the best they can to fulfill people being able to get mortgages. Angelo said today that they've changed the way that they're doing business.
Yeah.
Look, in any business, you live and learn.
Yeah. All right, I got to get out of here, but first to you, John, what is your tell? If the mortgage market stabilizes and the economy is in a good shape, how will we know? Where will we see it first?
Where will we see it first?
Yeah, which data set was it? Starts as applications for mortgages. Where will we see it?
Dylan, I think what's important is the valuations have to be known first. The valuations of these portfolios have to be known, and if that's the case, then the credit markets are going to become a lot more liquid. I think that's where you're going to see it first.
And then last to you, Martin, if doomsday develops, where will we see it first? I mean, other than the obvious doom.
Oh, where will we see the, well...
Which data set will express it first?
The problem is, and here's where I agree with with Angelo, and that is that we don't have the data until it's too late. Right now, it's happening. In 20,000 cities across America, the mortgage boom is becoming a mortgage bust, and we haven't even begun to see the impact of that. Yeah. So if you're talking about the data, you'll have plenty of data coming out of your ears, but it'll be too late.
All right. A pleasure. Thanks for the conversation, gentlemen. Thank you both. Melissa.